in general, we see that in the developed economies, in most of the developed economies, interest rate has gone down quite a bit on a macro level. Probably it seems India is also following that trend. I remember when I used to earn like 18% bank deposit, NRE deposit rates when I was overseas, 18%, 19% and all. Now even getting 5.5, 6% is a tough job. So generally, in the next cycle, probably in the next 6 months or 1 year, if interest rates starts going up in India, whether how long, how much it can go up, or is seeing the trend, general downtrend in interest rates in the longer term.
Yeah. So I would say that we have looked at interest rates in India, a lot of developed markets, a lot of emerging markets for the last 30 to 40 years. So one thing which investors should always remember, that there is a difference between nominal rates, which is the rates which the banks offer, where the rates which we actually realize in our investments. These are the nominal interest rates. We always need to look at the real interest rates, because that is the money which is actually earned for giving your principal on interest. So for example, when we were earning 18%, as you rightly said, in the early 90s, at that time inflation was quite rampant. We had inflation to the tune of 15%. So the real rates of return was about approximately 3% in India and in most of the parts of the world as well. This 3% has in the 90 to 2000 decade, that is in the years from 1990 to 2000, reduced to approximately 2%. In the next decade, it reduced to 1, and from 2010 onwards, it started gradually its descent towards negative territory in the developed world, and towards very close to 1 and 0% in India. So we think that the real interest rates may rebound a bit, but don't expect a surge in interest rates unless and until there is a insignificant increase in inflation, which might show up in the nominal rates. But we don't think so that there will be a massive increase in the real interest rates in the next few years.
Okay, okay, that is a good news for consumers, people who are
Yeah,
buying houses, cars, etc., etc.
absolutely.
Although it may hit little hard on the senior citizens, but for the general economy, majority of the economy, it is a good news.